Hello and welcome back. Hope you are good, doing well. So, if we are having Bank of Japan raid the CN tonight, and it's a very high risk event. But before going to look at that, if anyone want to join us for training or trading, just simply visit wave-trader.com, and if you're looking for further information, just simply fill that form and send that to me. All right, so dollar yen. Okay, so dollar yen is just simply setting up for a breakdown. But before, we are having some sell off over there. Okay, we can see that yesterday we got some sell off, all right, and then again we got some strength today because of the ECB rate decision, and then again we got a very sharp sell off in the last couple of hours. Okay, we got a very sharp sell off. So what has caused that sharp sell off, and is it possible for that sharp sell off to continue to keep appearing over there for more downside? So we need to understand the logic behind and the reason behind why we are having that sell off, and what are the possibilities for this sell off to continue to keep pushing more lower, and what needs to be changed, right, for this sell-off to sustain for more downside, right? Where the changes required from the Bank of Japan for the yen to keep gaining, right? So this news just broke out in the last couple of hours. Bank of Japan to discuss yield curve control tweak. All right, so you need to understand that what is tweak, all right, to allow rates over 0.50%. Okay, we need to understand that what is the tweak, and why dollar is dropped against the yen. So if we're gonna go through this quickly, the Bank of Japan will discuss tweaking its yield curve control policy at a policy board meeting. So they're gonna discuss. All right. So this news is not saying that they are going to tweak tonight. All right, so the news says that they will discuss. Means that there is chances that they're not going to tweak at all. All right, and no decision at all tonight. So news just say that they will discuss. So because of that news, we are having strength on the yen. All right. So Friday to let long-term interest rates rise beyond its cap of 0.50. So this is the upper band right now of the 10-year yield curve, 10-year yields. All right, so Bank of Japan is buying bonds every time and yields come closer to that. So we're going to talk about that in a while. Okay, by a certain degree, Nike has learned in what would be a shift toward a more flexible policy approach. How, far they goes, if they are going to change the upper band from 50 to, let's say, 75, right, 0.75 or 1%, or even they are going to completely abandon that yield curve control. So we don't know what they're going to do. So news says that they will discuss. So under its yield curve control, the central bank buys large quantities of Japanese government bonds. Okay, if 10-year yields look likely go beyond its allowable range of 50. Yeah, when yield come closer to 50, Bank of Japan step in and they start buying the government bonds. All right, and drag the yields lower. That's what they are doing since last 2 years, since last couple of years. All right, and which is, that simply means that they are creating more money. Right? Every time when they are buying bonds means that they are creating more money. So creating more money means that weaker for yen, so causing yen to drop. So below or above zero. So resulting in marketing distortions. So the proposed change would keep the rate ceiling but allow for moderate rises beyond that level. Yeah, every time when they buy government, when you come closer to 50 and they buy bonds, create more money, weaker yen, this is also creating inflation. Yeah, but as we know that inflation is not a problem in the Japan, all right, but right now it is a problem, but in past, inflation is not a problem. So right now the core inflation is somewhere close to 3% or 330 core inflation, above the Bank of Japan 2% target. So since the ceiling was raised from 25 last December, 10-year yields have risen to around 44. That's where it is right now. Still below the current cap, but domestic inflation and continued rate hikes by other major central banks like the Federal Reserve and the European Central Bank are fueling concern that the yields could climb past the 0.50 threshold. All right, so that's an overview. So we're not gonna look at the whole news. All right, so now let's get back to the chart again. Let's look at there where you can understand that. So first of all, we need to understand the policy gap, policy divergence between the central banks, between the Fed and BOJ. So I'm gonna put, yield. I'm gonna bring, inflation first, all right, rather than the yield. So the Japanese inflation, we need to bring the Japanese inflation. So there is the Japanese inflation. Okay, so the headline inflation is sitting at the 3.30. So if I'm gonna go on the right side, I'm gonna bring the US inflation. We need to understand the policy gap first. That's the US inflation. All right, so if I'm gonna put US interest rate on it, USINTR. All right, and Japanese interest rate, all right, BOJ interest rate, JPINTR. Okay, this is the policy gap. We clearly can see that the policy gap here. All right, so inflation went up. Fed started to raise the interest rate. No, inflation started to fall. All right, but inflation went up in Japan, but Bank of Japan did not raise the interest rate. They are still holding the interest rate at negative territory. Negative 0.10. All right, and the Fed raised the interest rate. All right. And if I'm going to apply USINTR on this chart, there you see that the rates are very low. And in the Japan rates are negative, while the rates are 0.50, right? 5.50 in the US. This is the policy gap. So, Bank of Japan is holding interest rate over there at 0 intentionally. Okay, so what they are doing is, if I'm going to put the yield, all right, so this chart on that chart, so JP10, right, JP 10 year. So if I'm going to put 10-year yields on it, that's the 10-year bond yield, okay, which is standing at 43 right now. So if I'm going to look at that chart, all right, so this chart, just let you know that on this chart. So there we can see that. So the previous, so Bank of Japan is, having that yield curve control since very long. I think since 2016, they are not letting the yields rise above. They are not letting the yields rise above. All right, and there is their band. Okay, the lower band is 25, and the upper band is 0.50. Now, every time when yield goes to there close to 50, Bank of Japan started to create money or started to buy bonds, right, and push that yield lower, which is which is pushing the yen lower. Okay, now we understand that this policy divergence, all right, so the policy divergence is there. So yield is there, the 10-year yields is there, and US interest rate is there, Japanese interest rate is there, and inflation is there. Okay, so this is basically the policy. The inflation is falling in the US, interest rate is way high, inflation is now falling in the Japan, all right, interest rate is negative territory, and Bank of Japan is having yield curve control. Now let's get back to this chart, all right, and I'm going to apply the same charts here, all right, the Japanese. So I'm gonna apply the Japanese interest rate, all right, and Japanese inflation, all right. So IRYY, so yearly inflation. So there we can see that. Okay, so there we can see. Okay, so where is the inflation? Inflation at 330. Where is the yield? Yield is being controlled by the Bank of Japan. They are not letting yields to go after the inflation. They are not letting the 10-year yields to follow the inflation. They are, holding capping it. They want inflation to push more higher rather than coming down. That's where they are keeping the ultra loose monetary policy. All right. So and holding the interest rate close to zero. Right. That's where we see their ultra loose monetary policy. That's where we see their ultra loose monetary policy. Yields, you see there, the inflation started to rise. It went higher, and after that we have seen that the yield started to rise too. Okay, but interest rate is not rising. So there where they have seen a lot of pressure, the Bank of Japan, when inflation was significantly pushing higher, they were feeling, the bond market was not functioning, and then bond market forced them to change the upper band from 25 to 50. They changed that, all right, and yield went higher. Now they are talking about the news which we have just seen, all right. The BOJ going to discuss that yield curve control. They are saying that the news is saying that they will discuss. They are they going to change that band from 0.50 to 0.75? If so, then this yield, all right, the 10-year government bond yield is gonna jump to that band. Or are they going to change it to 1%? Right, so we don't know. There is also a possibility that they're not going to change, which is very likely. All right, they may not change and put that to the next meeting. Or I'm going to say that we're going to do that the next meeting. All right, but this will remain there until inflation doesn't fall aggressively to the downside. Okay, they will keep facing that pressure from the yields. All right, as long as inflation is high, yields will keep tapping those 50 basis point, keep hitting that, right, and will keep trying to break up. So if Bank of Japan is going to change that from, let's say, 50 to 75, yeah, we're going to see sharp rise in the yield. All right, so the way we have seen there, sharp rise will come, and then again Bank of Japan can intervene over there, can start buying the bonds over there again. Okay, so we may see that move here. Bank of Japan, I mean 10-year bonds can be sold very, very aggressively, which can cause the yen to gain so aggressively. Okay, yen can get stronger very, very aggressively if that move happens again tonight. All right, or if they let that to go completely up to 1%, all right, 1%, again same, they may intervene again at 1% to push that to lower. All right, the upper band to lower, to calm down the market. All right, so this is yeah, obviously when they're gonna change that band, all right, upper band or upside, market will also force them to change this negative rate as well. Okay, so are they going to change that negative interest rate within this cycle, which is very less likely? They may bring that to positive territory, or at zero. They can bring that negative to zero. Right, they can bring that to zero. Zero is there, so they can bring that to zero. So still gonna be a very, very big policy change, even if they are just going to tweak that, right? If they are just going to tweak from 0.50 to 0.75, still going to be a big policy change. All right, so what you should look for if that happens, if this policy is, if they are going to tweak tonight. Okay, so tweaking, this is a tweak where they have tweaked. All right, they changed 25 basis point to 50 basis point. Are they going to change for another 25 basis point, or completely 1%, or completely going to abandon the yield curve control? All right, going to let the bond market, move freely. If they are going to do that, I mean, completely going to abandon the yield curve control, this is going to be a very, very big news for the market. Okay, and that is going to give us a very big move on the yen pairs. If they are going to completely abandon, if they are not going to do that tonight, all right, this situation, as long as inflation is high, they will keep facing that a pressure from the market. Now let's talk about the dollar yen. Okay, so dollar yen can move to the opposite direction. All right, so inflation went higher. So when they're going to change that, when they're going to tweak that, all right, so inflation going to feel the pressure, going to come down, and we're going to see strength on the yen against the dollar. All right, so dollar yen will also come down. So what's causing the dollar yen to continue to keep pushing more higher? Simply that policy divergence. All right, so if I'm gonna, that policy divergence, if I'm gonna, yeah, so this interest rate, you see that? So the interest rate, so policy divergence is very much simple to understand, right? So if I'm gonna USINTR, so I'm gonna bring that chart, all right, and I'm gonna apply JPINTR on it. That's a policy divergence. All right, this is a policy divergence. So Bank of Japan is not raising the interest rate. Fed raised the interest rate. Huge gap is there, right? Huge gap is there, and inflation is falling in the US. Inflation is falling in the US, and also peaking. Inflation is peaked in the Japan, and inflation will fall over time. So we only can expect Bank of Japan to change policy. Yeah, we only can expect that. So how this gap gonna shrink? This gap gonna shrink? This gap can only shrink once Fed gonna change its policy and gonna start cutting the rate, right? And Bank of Japan also gonna change the policy, right? They're gonna start raising the interest rate, right? So once that policy gap gonna shrink, we're gonna see strength on the yen. Dollar yen gonna keep falling. So that's why we are expecting that the Fed has peaked the interest rate. They're not gonna raise the interest rate for more upside. They peaked, right? They only can cut rates from there, and Bank of Japan can only raise interest rate from the floor. They cannot cut further, all right, because inflation is high in the Japan. So this is the longer term bigger picture. This bigger picture is not going to change. This bigger picture is not going to change. This will happen over time. Okay, this is going to happen over time, and eventually we're going to see strength on yen, and dollar going to go down. Right, so how long Bank of Japan gonna hold is the question. Are they going to hold again tonight, or are they going to change? So this is basically the tweak, all right? That's the tweak, and that's changing the upper band and moving that band from higher. That's a policy. That's a tweak, guys. All right, so let's see what Bank of Japan is going to do. Either this is just a fake news, we can say that, or just a news. So what you're expecting from dollar yen? Okay, dollar yen is currently dropped on that news, right? But we haven't got confirmation. So confirmation only can come from the BOJ. BOJ can confirm that yes, they are going to tweak and going to change the policy, and we are going to we're going to see that move all the way up to that. So if they're not going to change tonight, again, no change at all, business as usual. Okay, we're going to see another leg higher, which I have already shown you in the previous video analysis. All right, so price is going to go back up and test that top, and again we're going to see intervention, verbal intervention from the Ministry of Finance. Ministry of Finance, they are not comfortable with the weaker yen. but Bank of Japan is now on their side. Bank of Japan is, Bank of Japan is maintaining the yield curve control, while Bank of, Ministry of Finance, they are, trying to, push their currencies higher by a verbal intervention or by selling the dollars. So both going into in different directions. So if both going to come on the same page tonight, let's say, Bank of Japan is going to change the policy, both going to be on the same page, and we're going to see a big move tonight. All right, so change in policy, bang, it's already some investors just came in, they thought that they're going to change, all right, but they are not confident enough. All right, so let's say if the Bank of Japan is going to surprise, bang, we're going to see a big sharp sell-off. Very less likely, guys, but you don't know what they're going to do. Okay, so hopefully you understand that. What is the tweak? All right, what is the upper band? The upper band is the 0.50 basis point. All right, that's the upper band. And every time when the yield comes closer to 50, Bank of Japan is buying the government bonds. Okay, they're buying the government bonds. That means creating more money simply. All right, and that puts pressure on the yen, weaker yen, and also inflationary move. All right, so they have done other days as well. All right, they bought, but how long they can hold that? Every time it comes, they have to buy to push it lower. Every time when yield comes closer to the top, they have to buy. So they're tapping it to the downsides. So they were keep doing that. They were keep doing that when it was here at 360 days. All right, and they have done that almost 220 days. All right, so almost 220 days. So how long they're gonna keep tapping yields lower from their high? How long they're gonna keep buying those bonds? All right, so let's see what happens tonight.